Everybody, this is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com, and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. Well, happy Monday, everybody. It is a brand new week. We just had the most phenomenal close on yesterday. So we've got plenty to talk about with the weekly close and some other things. So before I get too far in, just wanted to remind you that Wednesday is the live stream and it is at 12:30 Mountain Time. So you're sure welcome to join. And my home base is at cryptoinfluencers.com. This is the free channel and this is the paid one in case you're interested. All of my live trading happens here in real time, so you can see exactly what I'm doing in case you're interested. All right, let's take a look here. So we are looking at a brand new week. Just a quick follow-up from yesterday, or from the last time we did a video. I guess it must have been Friday. We were talking about this market psychology, and so we had all these different stages of hope and thrill, euphoria, complacency, and then back down to panic and capitulation. And I talked about how that we were in the disbelief stage, where this was the suckers rally. And disbelief, so there's disbelief on this side of the chart and on this side of the chart. And this disbelief it pulls back a little bit, and it makes it even harder to believe that we're out because there's some kind of a pullback of some kind. And then we start moving up pretty decent, and then people start catching on that, hey, this is for real. Well, just later, I don't know if it was Saturday or something, I was on Reddit, and maybe, let's see, one day ago. So this had to have been pretty close to when the weekly chart ended. So this was exactly what we were waiting for. And there was some discussion here, is 30K the new 6K? And talking about how we ended the bear market in 2019 and how we'd started moving up and we'd been working on some resistance that we had been battling with for a while and all of that. So decent thought. I liked it. The number one most popular, most upvoted response to this was, "This is just a sucker's rally." Oh my goodness. You just, you can see it. Like, maybe you can't see it until someone points it out, but once someone points it out, this is amazing. Like, it is the very first comment on hey, are we moving out of this? The very, very first response is, "This is a sucker's rally." 70 upvotes. And then I think I agree with this comment. Something doesn't feel organic here. Something feels off about this rally. And then whatever conversation. And then you go down to the next most popular response. After all, the majority has to be wrong, right? Exactly. Everyone's bullish when the economy keeps tanking. I even doubt the low is in yet. This person's a little more excited, so he's thinking that we go up, but there's just a lot of disbelief here. So a lot of people feel like it's going to drop back down, and I looked at several different articles, and it was people thinking that this is the last push before we drop to 12,000. Can you imagine going to 12,000 after this? Oh man, it just makes you think either they have no idea what a chart technical looks like, or there's nothing on this chart that says 12,000 is about to happen. So anyway, Thought you might appreciate that just because we just barely talked about that. And the most like common thing out there in the, random verses, people that just, they're like, this is totally a sucker's rally. This is not going to be sustained. It's amazing that we went from 20,000 to 28. Like, this was unbelievable. And do I think we'll continue? I think we need to take a break, but we're absolutely going to continue in my mind. So let's look at the weekly close since we just barely did it. So we have a reverse head and shoulders. We were waiting for a break of the neckline. We were also waiting to break the 50. We were also hoping to break the 200. We got it all, man. We got it all. Oh, it's the best thing ever. It's unreal. This is what we've been waiting for a year. This is the sign. We exited the yellow zone today. I can't even tell you how big of a moment that is. We exited the yellow zone right here. Boom. Straight up. We exited the yellow zone here. Boom. Straight up. We exited the yellow zone here. We doubled, pulled back, exited another yellow zone here, and boom, straight up. This is the first of a pretty sweet upside, if you ask me. To go back into a yellow zone after we've had a clean green to yellow, and we've done this several times, green to yellow, exit the yellow. The only way to drop back into the yellow zone is if we lose the 50. Well, here, when we exited the yellow zone, we were up, we kind of stayed away from the 50 for a long time, all the way up through till our high. This one, we came back and we tested it as support, pulled up off of it, and then eventually lost it here. And then the COVID crash dropped us through really hard. But then once we got here, we just stayed above it and went straight into our thing. We had a full test of the 50 on our kind of first of the double top, and then up here, and then this was our flip to yellow. But if you go from yellow, you've usually got a white zone for quite a while. That means we are most likely going to hold this 50. Most likely. This shouldn't be too hard to do. Our 50 currently is trading at just below 23,000. That means, according to this, theoretically, 23,000 is now our new theoretical bottom. We should not be dropping back below this. And what's really cool, oh, look at me messing up my stuff here. What's really cool about this is that the move has been sustained. We want to see a breakout, but we don't want to immediately reverse course and look for support. We want to hang out for a while. We want to do a nice long consolidation before we pull back. Is a pullback on the table? I would think so. I think that what we really like to see is a nice consolidation for a while, because we need some blue sky. We need a window up here above. So we break up, and if we can go flat or hold on or sustain or consolidate, and then come back and hit our highest level of support and hold it, then we're off to the races. Like, this thing is just going to go crazy. And that number is this 200 week. If we can stay away from this 200 week for as long as humanly possible, and then eventually come back and hit it as support, we're out of here. Well, it's a weekly chart, so we do not want to touch it this week. We do not want to see 25,000 this week. We want to see, we'd love to range for a couple of weeks. In fact, if we stayed right where we are for a month, it would be so bullish. If we went for about a month or so and then we came back and hit it, then we would be ready to rock and roll. What could happen, now that we're out, we've broken all of the important resistance that we need. We could consolidate for a little bit. Later on this week, we could literally continue up and hit our 100. And this is at 34,000. If we do that, we'll probably reject. This is my speculation. We will likely reject, and then we really will come back and look for our 200. So by then, our 200 could be above 26,500, something like that. But we will probably come back for a little bit, and then we're still in great shape. There's no way our 50 will be here. Our 50 is still downward sloping until we find 50 days ago that this candle is higher than whatever our candle was 50 days ago. Well, this is the candle that we're looking at. So we have a close of 42,000 here. So 50 weeks ago, we were at 42,000, and then 39.5, and then 39, and slowly we've moved down. Once we start getting candles higher than these back here that we're replacing them, that's when our 50 will finally start ticking upwards. So the 50 is continuing to drop. That's why it's going to be real easy to hold above this, which means we've consolidated for long enough. Our market structure is perfectly in place. Everything looks absolutely beautiful right here. But yeah, this is a monstrous candle. This is a big weekly. But don't underestimate how long a weekly candle can go up. These things can go up. I would love it if we went a little bit sideways and chilled out for a little bit, found some support, and continued like a measured move up. It'd be much more sustainable. But the fact that we closed here and broke not only the 50 but the 50 month plus the neckline of our reverse, inverted head and shoulders, plus the 200 week, like we just hit everything on our checkbox. This is so bullish. It's amazing. Oh, it's so good. So we have some good things going. From the daily standpoint, one of our concerns on the daily was that we had a bearish divergence happening. And there is some bearish divergence happening on certain time frames, but look what we've done. We put in a higher RSI than our prior. So now our highs, we're getting higher highs on price action and higher highs on RSI. So our bearish divergence is resolved. So we are now, there's nothing stopping us from here. But yeah, so we could really do some damage. We could consolidate for a bit. We could just, the markets might be absolutely flat because I believe there's an FOMC meeting tomorrow. So there's some stuff happening. This could really could get all the way up to here, and then we could start chilling out. It could be some pretty violent swings here, but the macro view at this market is we've completely changed momentum. So the people that think we're still in a bear market, they're in denial. They have recency bias. Recency bias is when you have a certain outcome happens so frequently in the most recent past that you think the future is going to look like that all the time. So your expectations are skewed based on the most recent past events. And for an entire year, our brains have been conditioned that whatever we go long on, we're going to lose money on. And so people just can't believe that we would not be doing that. And so there's a market psychology miss happening in a lot of retail minds. We have gotten a higher high than our prior higher highs, and this is multiple. Now we were higher than our last 4 highs, because if you count this as a high, this, and this, we're now higher than all of them. But we had this high for sure that was above all of this, and then we did a swing low, and this low was much higher than our low here. In fact, it was also higher than all of these lows. So we have higher highs and higher lows in the books. This is a full momentum change. If people are missing this, they don't know how to read a chart. Now, is it guaranteed? No, nothing's guaranteed in trading. But is this greater than 50% odds that we're on our way out of here? Absolutely. And that's what we're looking for. So that is this market. That is what we're looking at as a market. We've got some good days coming. So this is buy the dip time. When you buy dips, when the market's in a bear market, you're the dip. But if the market has a momentum shift and we are showing strength, these dips are gold. This is when we buy in. This is when we get in. We want to be buying dips when the market is showing strength like this. So lots of good things. Not only does Bitcoin look phenomenal, Ethereum looks phenomenal. Look what we did on Ethereum. This is the weekly. Same thing. We exited the yellow zone, crossed our 50-week moving average on Ethereum, and this Ethereum chart looks way better. The market structure is phenomenal. we've already put in a higher high or higher low. Putting in this high is starting to break up some of this resistance. So this one's having a full change. So the weekly looks really good here. I'm going to go down to, here's the longest history on Ethereum. So there's not a ton of information, but look how we exited this yellow zone. Boom, straight up. Little fake out at the top here. This was our 2019 when we got a little bit too overheated and then came back. So this was kind of a fake out. So they exist. But once we exited all of the, once we had the 50 behind us, we went launching 200 to 4,000. This was a massive move. and this is it. We are exactly yesterday, as of yesterday, we have exited the yellow zone. So if Bitcoin has this green to yellow to white, Ethereum's got the same thing. I'm expecting Ethereum to go. Now, Ethereum's not going as fast. There's some differences here because on Bitcoin, we've already overcome this high, and on Ethereum, we have not yet. And you can see that in the Bitcoin dominance. Bitcoin dominance means that this is the percent of the total market cap that Bitcoin makes up. So we were all chilling around 43%. So Bitcoin's market cap was about 43% of the entire market cap. And now we're all the way up to 47. So Bitcoin is taking a huge amount of market share away from the other coins. It's going up, but the other coins are either going flat or not going up as fast. And so this is kind of showing that the other alts or Ethereum are kind of lagging out a bit. Well, they will lag out because their market structure is different. This is what we need. We've built a beautiful foundation. Beautiful foundation. But Ethereum's being a little bit more cautious, which is perfectly fine. But our target for Ethereum, now that we've broken out of our 50, is 2,000. This is our target. So on Ethereum, we're looking for a $2,000 Ethereum. On the weekly, the target's 1940, so we don't even need to get to 2,000. If we're looking at the daily, our target is 1984. So right in here, just below 2,000, is the target for Ethereum. So what happens when we finally create the right chart structure? We've got everything we need, and we're finally pricing at about 2,000. When 2,000 breaks, that's when Bitcoin dominance is going to drop. So that's what we're looking at. Because once Ethereum is through the last of its resistance, then it's blue sky. Then we've got Ethereum with nothing in the way. We'll run straight up to about 2,500, potentially 24 if we hit the 100 first. But we will likely wick to the bottom of these candles here. So between getting above 2,000 and hitting up here, Ethereum's got a little bit more resistance in its way, where Bitcoin is pretty clear. We've already overcome this, and we did it with authority. So there's a lot of upside here. Lots of beautiful upside for Bitcoin. So it's running. But I have a large position in Ethereum, and I'm happy with it. I'm just waiting because this market will play itself out. And the Bitcoin dominance will eventually drop. Right now, it's just really running hard. But on the daily, I actually put this out there with the Pro channel. These tops right here, they're kind of 3 levels, which creates kind of a band of resistance. And we're in the thick of it. So we are kind of in the middle of this resistance. So we're watching Bitcoin dominance taking off. But the interesting thing about Bitcoin dominance is that there are times when we did increase really fast. Like you can see how this got really, really vertical. Well, once it was over, it was over. Look how fast it dropped. Same thing right here. We jumped up really fast and then we pulled back really hard. So when Ethereum breaks out, it's going to break out in a major way, and it's going to leave Bitcoin in the dust for a little while. And that's exactly how these happen when it gets really toppy. So every time Bitcoin dominance got really toppy and ran up really fast, we were near the end. So I'm just waiting patiently, waiting for that Ethereum to come around. But yeah, just, I'm a patient trader. I can wait a long time for things to go my way. And the days of waiting a long time are wrapping up. Like it is go time. When we have destroyed the resistance on our Bitcoin trade here. I mean, every trade, every one of these charts looks unreal. This falling wedge, supported twice, broke through everything. Had exactly what we needed. Full reversal candle right here. Boom, we were out of here. But especially this, our target on this is 32,000. On our reverse head and shoulders, this comes with a target when you break the neckline, and that is 32,000. So if it takes a few weeks to get there and the 100 drops down, it'd be a beautiful sweet spot, especially if we take our time getting there. But the worst of this market is behind us. All of these guys that are in suckers rally mindset, they are going to miss out. And there's a lot of money on the sidelines. And there's a lot of money on the sidelines that are in disbelief stage. Well, when do these guys jump in? Do they jump in when it's hope? They want to, but they're now they've missed the trade so badly that they're not sure what to do. And it's going to take this move to actually scare them into it. So the FOMO, when we're looking for exits, the people that missed it, they're buying. And it's just the sad tale of how markets work. But we're just, doing this for a living. This is the mindset we have. We just look for the opportunities as early as possible. We try to catch all of these trends playing out and get it early. And we're well positioned ahead of a lot of other people that are sitting on the sidelines. And believe me, if everyone's expecting a full global meltdown and they're all running to the bank to withdraw their money, there's a lot of cash on the sidelines right now, a lot. And so all you need is the right shape of a chart and a place that shows so much strength that it becomes a safe place for people to put money in their minds, and the money will flow right in, and this thing can really launch no matter what the rest of the market's doing. If we're flailing sideways and really struggling, then the rest of the market can get in the way. But if we are having week after week after week of these just little gains, just marching on up, they just can't help themselves. The right chart creates the FOMO. So anyway, that's plenty of stuff to talk about today. I'll wrap it up. But I just couldn't be more happy about this weekly close. And we will have to be a little patient, I mean, don't get married to the idea that 28,000 is the bottom, because we went up a lot. But if we could kind of hang on for a while and eventually dip back to the 200 and find support, man, you just couldn't ask for better structure. So yeah, our neckline is at 24,300. So there's always that chance that we'll come back and hit the neckline, and it's perfectly normal. That's how you build market structure. You can leave it for sure, but you can also come back and it's perfectly bullish. So we're going to be patient, waiting for Bitcoin dominance to drop, wait for the rest of the market to catch up. There's a lot more waiting, even though we've got some really awesome technicals in our pocket. So, all right, you guys, we'll catch you tomorrow, and at the very worst, we'll be seeing you on the live stream on Wednesday. All right, see ya. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.